Eric Mother.com. It is August 9th, 2015. Take a look at how markets closed for the week on Friday. And we see that the markets had a slightly down session, about 0.25 on average. The biggest mover was crude oil, which was down 2.43% on Friday. And we also see that the VIX was down about 2.76% for the week. S&P 500 was down 1.25% for the week. The Dow was down 1.79%, and for the week the NASDAQ was down 1.65%. So let's take a look at how the charts look like after that week, and we see that we are coming back to levels on the dailies and weeklies where the market could find support. If you take a look at the NASDAQ weekly, it is coming back to this line here, where if it holds again on this line around the 50 RSI level and bounces on that line, that's indication of the next swing trade being to the upside. We'll see how that develops. If you take a look at the NASDAQ from a daily view, you see this also across the board, that if this line holds, so if it holds and starts moving higher, that's a sign that the market is due for a swing trade to the upside. On the other hand, if we break below that level, then that's clear indication that we are due for a swing trade lower. Right now we are on the line or closed on the line. Tough to tell which way the market wants to go in terms of either a bounce to the upside or a swing trade lower. Take a look at the Dow weekly, and you can see the Dow is threatening to break this line where it has been bouncing. So let me draw that line there, and clearly you can see that the last couple pullbacks going back to 2012 on the weekly have taken place with the market coming here and kissing this line and bouncing, which was a good re-entry. Same thing happened here during these lows, and now we are back testing this line. So clearly if the market holds, then that's going to indicate momentum is going to swing to the upside. Otherwise, if we break below that green line, something we haven't done in about 3-4 years, if we break that, that's indication that markets are poised to go lower. We take a look at the Dow daily, and we see that it is coming back to test this RSI lows line, and this line has been successful in holding the market together during pullbacks. And even during this pullback here, bounced on the line for a couple of days, double bottom support here during this lows for a couple days higher, and now we are back to this level. If the market holds there, that's good indication of the idea that the market wants to move higher. Otherwise, if we break that clearly defined RSI lows line, expect your markets to be going lower for the next swing trade. We take a look at the Dow hourly, and there is some indication here that the market looks to bounce higher. Reason being that we see the market making a lower low in price here over the last week or so, and we see that the RSI is improving. So you have a positive divergence short term, indicating that for now the signal on the hourly is that the market wants to move higher as long as this positive divergence situation continues. So we have again lower lows in the price and improving technicals. Indication there is that the market wants to bounce. This can also be seen if you take a look at the Dow 30-minute chart, and again you see that we made lower lows in price, there, and now we see that we made improving technicals on the 30-minute chart. Indication here is that this is suggesting a market that wants to move higher. The last time we saw that type of a formation was during this period here, where markets made a lower low and the RSI made a higher high. That was good enough for this swing trade to the upside. So now the question is this going to happen again? Of course, we'll have to wait and see. Let's take a look at the Dow Transports hourly. And on the transports, we see that this green line where it has been bouncing for quite a while, and most recently we saw that the market had these lower lows on the transports in price and improving technicals here, and since then the market has moved higher, bouncing from these lows here in entry and moving higher. We came here, we tested the green line again and we went below it and above it with uniform activity, which was during these lows, and the market had a nice recovery as far as the transports are concerned. And so now we are back here showing that if we move back above the green line, maybe something like that, indication is that the market is a buy. So either that line holds or it breaks. So that's one view, or we can draw a line connecting the lows. So if this line holds, then one can expect that the Dow transports are also indicating a snapback move in the market. Otherwise, if we break the line connecting RSI lows on the hourly for the Dow transports, if this line does not hold, then the indication is that the next swing trade is going to be lower. We take a look at the S&P 500 weekly, and we can see that the S&P 500 had a relatively big down week, about down 1.25%, as the weekly RSI moved below 50, and that move below 50 suggested net a down close for the market, which is what we got. And I think the S&P 500 is giving us a nice way to look at the market, which is if it holds above this recent weekly closing low of 2076.62, if it holds above that, then the market should look to go higher. If the market breaks below the recent weekly closing lows, again 2076.62, if it can't hold above that and breaks below that, the indication is that one needs to be looking for markets to trade lower. So it's very simple. Either it is holding above this level here, which is bullish short term. If it holds above that, it's going to be bullish. If it breaks below that, that's a bearish indication of the next swing trade. Let's take a look at the S&P 500 daily. And on the daily, we see again, just like the other markets we've been mentioning, it is back to test this line connecting recent RSI lows. And so since it closed exactly on the line, if that holds, that's good. That would indicate that the market is poised to go higher. On the other hand, if it breaks below that line connecting RSI low, so any break here, a break would suggest that the market is looking to go lower over the next couple of days, maybe even weeks and months. So it needs to hold for a bounce or break for a move lower. Let's take a look at Apple, which had a big down week, down about 0.433%, but off the lows, so big down week. The best way to take a look at this is take a look maybe at the 4-year weekly, and you can see that ever since it moved above this range here on the RSI, once the RSI broke out off the lows here in the middle of 2013, Apple has not looked back and it has traded well. So since these lows here, it has gone on to record higher highs. So clearly we can draw a line, which is what I call the uniformity line right there, and you can see that it is back to test this entry level, this sentiment level. If it holds here, the indication is that this is now poised to point higher, and also the price is poised to recover. So this is a situation where it can hold and move higher. Actually, it would make sense if that takes place. Otherwise, if we can't hold and if we break below that green line, suggestion is that Apple is looking to go low. So it's either make or break. But I think more than often when you see a stock come back to test its perfect entry level, and recently this is the line to watch, if that holds, the indication there to me is that this is indicating Apple wants to move higher. Let's take a look at the monthly charts here, and what we see here is I'm starting to think that maybe by the end of this year or early next, as the market makes the possibility of making fresh 3-year lows, this would indicate that once we break below to 3-year lows here on the S&P 500, which should be maybe towards the end of the year, November, December, maybe even January of next year, if we break to 3-year lows on the monthly RSI, one can expect a major bear market. So that's the risk in this market, that could take place. Also, you can see this very clearly on the Dow. At some point, the Dow looks to be, even right now, it looks like it is just about to make, well, you can even say right now it's doing it. As long as the Dow is looking to 3-year lows on the monthly RSI, that's going to indicate that this is the beginning of a major bear market. So keep that in mind. The RSI moving to 3-year lows is not a good thing on the Dow. And also we can see that right now one of the MACDs has already moved to 3-year lows. So because we have one of the MACDs at 3-year lows and the signs that the monthly RSI is also moving to 3-year lows, that would suggest that at this rate, if this continues, then we've already seen the highs in the market, and now we are due for a very serious bearish phase. Let's take a look at one more on the monthly, and it is the Dow Transports. Let's take a look at the transports here, and then we'll go to the NASDAQ. And then Dow Transports, I think the number to watch is this recent monthly closing low, and the level there is at 80.92.28. If the Dow Transports break below that level, that's going to be indication of a serious bear market. So keep that number. You can set the alert and forget it. But if you see that the alert has been triggered, suggesting that the Dow Transports have moved to fresh multi-month lows, that would suggest that truly we are beginning a very bearish phase. Keep in mind that the Dow Transport as of right now made highs in late 2014, and they're really off their highs. But the number to watch is this, which is the recent monthly closing low. If we break that, expect this market to be in trouble. That would also suggest that at that point it would be moving its monthly RSI to fresh 3-year lows, which is one of a bearish minimum requirements for a bearish signal. And also the MACDs have already indicated that one of the MACDs is trading at 3-year lows. So this is the risk. The risk in this current market is that we could go into a full-blown bear market. So let's conclude here by taking a look at the NASDAQ monthly. And we can see right now the biggest hope for this market or for bulls is that the the NASDAQ continues to hold its RSI trading above 69.10. As long as either of the major markets is showing strength by holding above 69.1, then the market is okay. So as long as if the NASDAQ continues trading above 69.1, indication is that the market is okay, that the recent pullback is just a normal pullback within a strong bull market. But if this cracks back below 69.10 and the Dow and the S&P 500 and the transports break to 3-year lows on the monthly RSI, be aware. We could be beginning a very serious bear market. Keep in mind that the NASDAQ has been trading above 69.10 for the most part since about April, May of 2013. And this has been the signal that the market has remained strong. Staying above 69.1 has been the indication of a strong market. But truly, if this cracks below 69.1, that would indicate that now we're in another phase, which is a bear market phase. Above 69.1, market is good. What I can do for subscribers is either later today or at some point tomorrow, as I continue to look for ideas on the breakout front and for momentum ideas, I'll send you part 2 of this belated market analysis video. So subscribers, either later today or tomorrow, expect there to be some stock picks sent to your email as I continue to do the research this week after my week-long vacation. So expect a video for subscribers either later today or at some point tomorrow, which should be basically stock picks that I think could do well if the market shows support. Eric Muaded, Muaded.com. Enjoy your Sunday. Good luck, peace, and blessings. Woo! E-I-C-S. Boom! Boom! Bam, 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 bam. Peace, blessings. Yeah. Testing 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26.